the gold near-term target, not a top, just a pause, is likely to be 3,000 to 3,200. And there's some reasons for that are momentum based. And not the round 3,000. There are some brokerage firms, I think, talking 3,000. They like to talk big, and they say, oh, in 2025, always looking way out. But I could see us get there very quickly. But on a ratio basis, if gold went to 3,000 to 3,200, only then took a pause, not a top. I think silver could easily be 55 to 60, meaning be 2% of the price of gold yet again, which is again, it's a ratio that silver's had to gold so many times in the last 50 years that it's almost a norm. Okay, it's not abnormal.
Gold experienced significant price movements in September, surging to new highs above $2,600. However, technical indicators suggest a potential correction in the coming weeks. Since the start of 2024, gold predictors have noted a steady climb in gold prices, with a sharp acceleration in September. Yet, recent chart patterns indicate that a pullback could occur in October or November. Meanwhile, silver continues its bullish streak, recording its fourth consecutive quarterly gain with an impressive 8% rise. Despite a slight dip in Monday's session, the metal's outlook remains promising, driven by a combination of economic factors and geopolitical tensions. Michael Oliver, after analyzing gold's past bull markets over the last 50 years, suggests that if similar patterns hold, gold could eventually reach around $8,000. In the near term, however, Oliver believes gold is likely to hit between $3,000 and $3,200, not as a peak, but as a temporary pause. While some brokerage firms project larger numbers, looking far ahead into 2025, Oliver expects gold could reach these levels much sooner. Currently, silver is historically undervalued at around 1.2%. If gold climbs to $8,000 and silver returns to 2%, it would represent a substantial rise for silver. The gold-silver ratio is currently around 84 to 1. Historically, this ratio has varied significantly over the past 50 years, reaching as low as 20 to 1 and exceeding 110 to 1 at times. Michael Oliver further highlighted that when silver's ratio to gold crosses 1.3%, it has historically signaled a major breakout and upward move. He suspects that we could see such a breakout by the end of the month, coinciding with silver breaking out of its recent trading range. However, unlike previous peaks, Oliver believes that this time, silver will experience a quantum leap into a new reality, with the potential for the price to surge even further beyond the initial rise. Let's dive into the video for more details. If you're enjoying the content, don't forget to give it a thumbs up and subscribe to our channel to stay up to date with our latest videos. Currently, only 11% of our viewers have subscribed. Help us reach our goal of 1,000 subscribers by hitting that subscribe button.
If you take the swing moves in gold, the past couple bull markets the last 50 years, and do the same thing again with good $8,000 gold just to match them, in terms of log ratio scale move. Those moves lasted a decade or so. Either, ours started in late 2015. So, another year or so wouldn't shock me. We're $8,000 or even higher. There's so many events out there that are going on that are fundamental and technical that this time around it's likely to be exceptionally dramatic. And so, like you pointed out, silver, it did have two intra-month spikes up to $50 at each of those moves, but that was like, thin air, lasted a few days. So really, on an annual basis, you nailed it. I wasn't even aware of what you showed till we saw it, but we're there, and it looks like an overlay of the gold chart the way you've done it there, which is accurate. And I think silver, if you do a ratio of silver to gold, go back 50 years, and let's say every year plot the highest level that silver was in relation to gold during that year on a percentage basis. What percent is silver expressed as a per ounce of gold? Right now, silver is like 1.2 something plus 1.2%. But if you go back 50 years, the number of years in that 50-year period where we've been up to 2% or 3% is almost normal. It's not like an aberration. So good grief, if gold went to even just 8,000, another replica of its prior ratio moves, and silver were to go to 2%, you do the math. Wow. Okay. So silver is definitely the one that we're focused on. As for participation, yeah, gold's the mama market, but silver is, the dynamics are far greater on a percentage basis. And silver starting to, we plot it like I discussed the ratio of silver to gold price per ounce, so what's percent of silver to gold. And that is rising above 1.2 right now, which is dirt cheap, by the way. historically. I mean, to have silver that cheap. We all know that. You get above 1.3, and there's a structure when you plot the chart of the silver gold ratio. You get much above 1.3, and you break out on that spread chart, which says, I'm going to launch. And I have this suspicion that maybe by the end of the month we'll be there. And that will be a signal that coincides with silver bursting out of this recent range. You know, the high back in May was 32 plus, okay, dropped down to 29, and back up to 32 again in, I think it was July. Sold it again there, got to 32.70, but not 33, okay? So if you're keeping a point and figure chart, you're doing your X's up to 32, down tick to 29, back up to 32, and then they whacked it again and went down almost to 26. So down ticks that took out the prior column low. That next dollar is likely to ignite more interest and a vacuum effect. Our best guess is that, I think Patrick's right. We're going to 100, 200, something like that. It's been done before in silver. If you go back and look at the action in 2010, 11, there was a gusher. Silver like doubled in a matter of several months. And back in 1980, same story. Now, those were tops once it was through. This time, it's not going to be the case. This time, it's just a quantum leap into a new reality. And I think ultimately will drive further. But right now, just on a short-term trading basis, don't be shocked if you see silver gush up into the mid-50s to even $60 area. Boom, like that. So that's our technical assessment. And right now, the action seems to be bearing it out.
U.S. stocks edged back from their records. Wednesday, as financial markets around the world took a pause following big recent moves, the S&P 500 slipped 0.2% a day after setting an all-time high for the 41st time this year. The Dow Jones Industrial Average dropped 293 points, or 0.7%, after likewise setting a record the day before, while the Nasdaq Composite edged up by less than 0.1%. Michael Oliver argues that the market repeatedly bounced off the same support line until it eventually broke, triggering a sudden and steep crash. He suggests that we could be approaching a similar moment with the Nasdaq. In the event of another market crash, Oliver believes that central banks, like the Fed and the ECB, will revert to extreme monetary policies, such as aggressive debt monetization, to stabilize the economy. According to him, these measures will ultimately drive investors towards safe havens like gold, benefiting the precious metal as trust in fiat currencies weakens. Let's now turn our attention to the video again.
Next quarter, in a week, the three-quarter average is going to jump up. You see the little circle on the price chart. That's where that new average will be when you open next quarter. Be about 18,600 on the Nasdaq. Okay, Nasdaq's right, about 4 or 5% above there right now. When you run a quarterly momentum oscillator, where you plot each month's bar in its relationship to above or below where that three-quarter average is, you get a different picture than when you look at the price chart. And you'll notice that ever since turning up from that 2022 low, when we were down close to 10,000, and you turned up, the momentum broke back above the zero line, okay, the three-quarter average, in other words. And there were three pullbacks. One occurred about a month or two after breaking out above the zero line. You pulled back to it and held it. Oh boy, held the average, okay. And then you shot up. Then you came back down in late 2023, and you sat on the zero line again. Boom, shot up again, okay. And then last month, when we were dropping from 19, 20,000 level, we said probably you're going to get a bounce at about 17,500. Why? Because that's where the silly three-quarter moving average was. And I'll be darned if you didn't go exactly to 17,500. You traded below it by about 30 points, I think. When you build a structure and use it that many times, and it's that clear and precise, it's not subjective where you say, well, it's a draw the line. Any idiot could draw that red line. I've got a momentum there. That's a structure from hell. You don't want to break. You don't even want to go back there again. Now, I'll tell you this. Before I started MSA in 1992, I was a futures broker. And I caught the crash in 87. And I caught it using the same type of oscillator here, only then I was experimenting with it. And the price chart of the S&P back then looked just like this one. Oh, it looked lovely. It just keeps going up, little pullbacks, keeps going up. It just, it's going to last forever. Okay. But when you looked at the 3-quarter average, it kept for 2 years in a row, just like we've done. It came down to the zero line, zero line, zero line, and built a structure that, you don't see it on the price chart, you see it on momentum. And in the first week of October, you nipped that structure, and within 2 weeks, you crashed. When you look at the price chart, you couldn't figure out, why did this happen? Yeah. Nobody saw it coming. And after that occurred, of course, I then shifted all my technical attention to momentum analysis going forward. Price charts to me were secondary. And that right now, this is what we're looking at, is the same type of structure that says you better not sneeze. Now, people say, oh my gosh, if it goes down, gold's going to collapse too. Okay, and that's a whole different issue, but it's a falsehood. And we went in depth in the weekend report showing examples of how, if you go back through the decades and circle this, that, the other, stock market collapse. The October 2008 event, which is burnt in everybody's memory, where the stock market already been in a bear market for a full year. It already collapsed in a big way, but suddenly in October 2008, a year off its high, it had a puke. It dropped like 30% in a month. And suddenly gold and silver said, oh, we're going to join you. They've been going up all that time. Stock market been going down for a year. They've been going up. So did T-bonds, by the way. And they suddenly joined in because they were technically ripe to have a correction. They needed it. And they did join in. Stock market kept going down through 2009 and took it several years to even get back to its 2007 high. And gold and silver immediately turned after that October break and took off again. But that's the one example that's burnt in everybody's memory as the truth. And when you go back in history, it is not true. And so now the question is, if the stock market does break and you get data points that follow it, which they will, that's how the data points work. They don't usually lead the market down. They occur after. The Fed's going to go apeshit. Okay, they're going to go berserk. And ECB, and they're all going to go back to doing what they always do best: destroy their money units by monetizing debt, by you name it, all the games they play. And that stock market will precipitate the onset of a real to the floor policy by the Fed. And what market enjoys that the most? Gold.
Gold is now testing the $2,700 level, while silver briefly surged to a 10-year high, surpassing $32.50, driving the gold-silver ratio to its lowest point since July. Despite some near-term weakness, silver has rallied following the Federal Reserve's recent interest rate cut. With growing expectations of a Fed pivot toward more accommodative monetary policies, silver is poised for further long-term gains. This aligns with broader positive sentiment in commodities, as precious metals, led by gold, which is trading at new all-time highs, continue to perform strongly. What price targets do you see for gold and silver by the end of the year, given the ongoing market trends? Drop your comments below, and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.